Welcome to another episode of Profit Notes. Today I will talk to you about something different than the usual. So, no geopolitics, no elections, no 10 predictions for 2026. Today we are talking about prediction markets. I think this is important because pretty much since 2024 and the US election, when prediction markets became mainstream, there are plenty of opinions on what they are. Some say it's gambling, some say it's finance and financial markets. Some say it's something entirely different, but I do think that the opinion of people like me, so long-time prediction market traders, wasn't really voiced and wasn't really heard. And I believe a lot of us have very different opinions, but I just wanted to present mine and put it in a discourse here for people to comment, see, and maybe popularize, because I do believe prediction markets have a future, and this future is, at least in my opinion, very important. So first and foremost, I think we should all agree, and this is not such an easy case, that prediction markets are actually markets. And if we look at economics, then economists believe that markets are there to facilitate trade, and what they do is pretty much enable the distribution and allocation of resources in society. And as it stands today, we have many types of markets, because we have equity markets, and what they do is they distribute and allocate capital to enterprises. So this is your bread and butter stock market, for example. We have debt markets, where lending is facilitated. So this is government debt, this is corporate debt, so all kinds of bonds. But this is also mortgage-backed securities, for example. So your 2008 financial crisis culprit, huge market. We also have derivatives market, and here is when the situation starts to become interesting, because derivatives do not deal in pure assets like stocks or bonds or commodities. They deal with risk associated with those assets. So what they do is they determine risk allocation. They shift risk from one person to another, from one organization or institution to another. And it's interesting because now we are talking about an intangible thing, because you cannot really hold risk. And lastly, we have some very exotic markets, because, for example, we have weather futures, and these are essentially contracts on weather. So I think that in this roster of markets between equity and weather futures, we can also fit prediction markets. They also do facilitate some kind of a trade, and they distribute and allocate a resource. But before we dive into what kind of resource that is, I think we need to understand what is gambling, because one could say that, for example, weather futures are gambling, or derivatives are gambling because of Wall Street bets. So where can we actually draw the line? Like pretty much everyone will say that going to Wynn Resorts, to a casino, that you go there to gamble, and I don't think anyone would argue. Like I think that 99% of society will also say that playing on GG poker is also gambling, or any other poker site for that matter. Like poker is gambling, like, despite the fact that there are many professional poker players that are profitable in the long term, it is still gambling for 99% of the people. But is stock market gambling, or is options market gambling? Some people say so, especially those that see what is happening on Wall Street bets with short-term options. But others say that stock markets and derivative markets are not gambling, because gambling has a very wide definition. It's a wager on an event. So we have two people, different opinion, money exchange, and pretty much it's gambling. But you could say the same about insurance. For example, fire insurance is a bet between you and an insurance company on whether your house burns down next month, next year, etc., etc. It has all the characteristics. There is an event, your house on fire, There is you that wants to bet that it won't burn down, and there's you that wants to bet that it will burn down, and the insurance company wants to bet that it wouldn't burn down. So you exchange money, you pay the premium, and if the house actually burns down, you win. So you may ask, what's the difference then? And I think that the fine line between gambling and non-gambling is the social value of the action, because there is value in having insurance. Is it regardless if it's fire insurance or general home insurance, car insurance, health insurance, life insurance? We have plenty of insurance products. So I think the question we need to answer here is not if prediction markets are gambling. We need to understand if markets like Polymarket provide value. And here we are back to talking about resources. So I believe the first thing I need to do, and the first thing that anyone that wants to touch the topic needs to do, is to understand that prediction markets deal in information. It's whether it's information about who will win the next Super Bowl, or is it information about the Ukraine ceasefire this year. It is information. And information has economic value, is scarce, and as apparent by prediction markets, but also copyright laws and patents, it can be owned, traded, or even leveraged. And that's not even all, because prediction markets are hardly the only place in which there is money spent and time spent on information. Businesses spend time on information and money. So OpenAI or Google, they spend billions and billions of dollars to develop LLMs. So they essentially spend time and money to acquire information that in results will allow them to produce a better model. People all around the world are paying for the possibility to go on a university and learn. So they pay for an opportunity to acquire new information. And the intelligence agencies around the world, be it CIA, Mossad, MI6, or any other intelligence agency in the world, they exclusively deal in information. So the agents or the officers, however you want to call them, they go around the world trying to get new information as fast as possible, as detailed as possible, to convey it to their government so it can make informed decisions. But not all information has the same value. Like I already mentioned that in the Super Bowl example, but as you can see, there is something that is probably extremely important, which is measles cases in the US in 2026. That kind of information can influence a lot of decisions. And there is less important information, like the Super Bowl I mentioned. But also, you can differentiate between precision. You can have a forecast. The forecast is obviously prone to an error, so it's less precise and less valuable than something like a definitive statement. For example, Vladimir Putin saying, "I agree to a ceasefire" in a backroom conversation. So I think we established that information is both a resource and can be valued differently depending on what it is. So can we just say that prediction markets are just financial markets that deal with information? Like CFTC likes to say that these are basically binary options on events. So these are financial markets that deal with information. But I believe it's not exactly the case. I believe that financial markets, first and foremost, should solve capital allocation problems. So this is your stock market or debt market. They solve capital allocation, and or the other markets around it. So for example, futures market that you have listed here, it's a derivative of the capital allocation that is mostly dealing with risk around this capital. So if prediction markets are not gambling, but they are also not financial markets, then what exactly are they? And I believe the answer is information markets. This is actually a concept developed by some economists in the end of 20th century as we moved towards what they like to call an information economy or a data-driven economy. The economists started to theorize what an information market could look like, a market in which information is exchanged. Back in the day, it was pretty difficult to imagine it because you can't trade information like a stock. Like information usually loses value if it's known by everyone. It loses value when the event already happens. There's a multitude of problems in quantifying information. But I think prediction markets is the one concept that actually solved it, and the one concept that can be named as information markets. Because what they essentially do is they aggregate the information from market participants to produce a probabilistic forecast. So me and other traders developed theses on what will happen in Iran, for example. This is a hot market right now. And then we enter the positions according to our thesis. And in aggregate, we produce a probability of, for example, a US strike on Iran by the end of January, so in 2 days. And this kind of information, it can aid various actors from states, like, for example, the US or Iran, that can prepare for a strike, to businesses that can prepare for a disruption in oil markets, to investors that can do exactly the same, and all kinds of other actors, for example, humanitarian organizations that can maybe think about sending some kind of humanitarian help to Iran, to all the people that were hurt during the protest, etc., etc., etc. So one simple market, like a US strike on Iran, can inform actions of various actors around the world. It will help them to create a strategy, to make decisions, and even to allocate resources to certain actions. So, in effect, there's also the other side. So, what if there is value for all those actors? Like, what is value for market participants? And here, like the answer is very simple. People like me or other traders, we are rewarded for providing good information by winning the position, or we are punished if our information was not good enough, so then we lose the position. And this is a great mechanism because what it leads to is very high accuracy of those markets. As you see on Polymarket, the accuracy is pretty much 90% over the line. So 90% of the time when the market says it's, for example, something is 80% likely to happen, then it is 80% likely to happen. And this mechanism of reward versus punishment for information actually reinforces that and makes those forecasts even more accurate. So by some time, the participants that are not exactly great at forecasting and providing information will be forced out of the market, while the participants that provide generally good information will stay in it, leading the accuracy rate close to 100%. Of course, it can never be 100% because then we will have a perfect information about the future, but it can get close to it. So if these are the new kinds of markets, those are the information markets, then what can we make of it? And I guess the answer is exactly the same as all kinds of other markets, because similarly to, for example, financial markets, prediction markets, and information markets can serve many purposes like entertainment. So as people on Wall Street bets can gamble on short-term options, people on prediction markets can also gamble, for example, on some sporting events, or just by not providing any information, just buying some position for entertainment. For example, in mention markets, this is very entertaining. A lot of people love to gamble on them, and probably there's nothing wrong in that because people in general love entertainment, love to gamble, and that's the way it is. But as other markets, prediction markets also solve the allocation, this time the allocation of information, and they also allow for speculation. So, for example, news traders on prediction markets are, in my opinion, pretty similar to hedge funds on financial markets. But what's important is that while those markets get more and more popular, then we go back to the previous argument that those forecasts tend to get more and more accurate. But ultimately, I think that what they will define is the future of forecasting or forecast-based professions. Because if like professions like geopolitics, epidemiology, or climate related to climate, or all the others that deal with the future, people that are engaged in those, with prediction markets, they can be directly rewarded for their knowledge. So they can have a direct benefit from their forecasting ability. And it stands hand in hand with what we call the data-driven economy and information economy. People that are concerned with the future should be able to actually make money from the forecast alone, not from their ability to sell it. So this stands in direct opposition to what I call a vibe-based punditry, so what you see on the mainstream media, and disinformation, so what you see everywhere else. These markets, because they aggregate good information, they can counter any bad actors that want to change the narrative or influence the narrative to achieve some goals that are not exactly honest. And I think that's the gist of my argument. That's pretty much everything I wanted to share with you today. I really don't like when people say that all prediction markets are gambling. I think that, well, while some of the markets here can be considered as gambling, for me it's nothing else than a financial market where also you can gamble, but you can also do other things like allocate capital. And I believe that on prediction markets, you can aggregate information, so allocate information towards a probabilistic forecast that then can be used by various actors to determine what they can do. And I don't know about you, but I see plenty of value in that. And I see more and more people seeing this value. So that's it. That's what I wanted to share with you. Let me know if you agree with me in the comments. If you have your own theory on what prediction markets are, then feel free to comment as well. And as always, if you like prediction markets, poly market, if you like geopolitics, elections, and general global events, then click that subscribe button, the like button under the video. You can also visit my profile on X, where I comment on a daily basis, as well as my Substack on profitnotes.com, where I put out theses on global events basically on a weekly basis. So thank you for watching, and see you soon.